out this week in Asia looking like the trend of the last, I don't know when you want to cut off the time, but certainly the momentum, the wind continues to be in the sails of the oil markets to move higher. Omar Najia, Global Head of Derivatives at BB Energy. Good morning, Omar. Your thoughts this Monday morning as the markets open in Asia?
Okay, so last week we said higher, strongly so. Market moved up about $2.50 plus per barrel. Some people are still not bullish, so I think this week I wouldn't at all be surprised to see another $2-3 a barrel up. Next week, still higher, and et cetera, et cetera. And I think basically it's very interesting, but I looked at this correlation. So when we had the India virus and the UK, the India variant, and then we had the UK.
What is now being called the Delta variant.
No, but hold on.
Oh, sorry.
So each variant market shot up. Now, the latest one basically is the Delta, and market shot up. And now we've got basically something called the Lambda. So I'd be looking for markets to go absolutely vertical now, because I think we're getting towards the end. Every single time you've heard this, worry about variant this, market's gone straight up. So I think as we're coming to kind of the beginning of the summer or midsummer, with talk of this Lambda, apparently this is the really, really, really bad one. So I'd be looking for markets to go absolutely vertical now.
So when you consider some of the more tapering, in the sense that a lot of the momentum of this market has been, as you've acknowledged yourself, lifted through the management of Fed policy and OPEC supply, as we sort of start the journey where that is no longer at least increasing, and may even start to be pulled back a little bit, how does that impact the momentum for the markets, Omar, do you think, in the second half?
Yeah, okay, so basically the way, since 2008, the Fed and all central banks, the West basically has done nothing except provide more and more liquidity, nothing. And basically, if and when the Fed, the ECB, start to basically do anything, including, raise interest rates, decrease buying of everything, blah, 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 the market's absolutely going to collapse. And it doesn't take, everybody says so. The market says so. The Fed knows so. The market knows that the Fed knows so. And so whenever the Fed comes, like last week or the week before, I think, came in and said, we might, maybe in 2023 taper, what did the market do? Market went straight down. But then it didn't take them long to realize that they really can't. So what did the market do? It went straight back up again. If the Fed increases rates, so basically you can look at it in two ways. The Fed is trapped. If it doesn't provide liquidity, market collapses. If it continues to provide liquidity, nobody knows what will happen. We get inflation and market might, I don't know what the term is, explode as opposed to implode. So they're trapped. They don't know what to do. So all this talk about, they're going to stop this and do that and whatever, I absolutely guarantee you, as soon as they do, markets will tank, and they'll do what they've always done since 2008, which is provide more liquidity, because it's the only thing they can do. They have no other toolbox. Interest rates are at zero, and the only thing that they can do is provide more liquidity, more debt. Now, at some point, everybody's going to hit the wall, face on, complete boom. But when that happens is open to debate, 2022, 2023, 2025, 2029. But that's the only thing that the Fed and the ECB can do, provide more and more liquidity and more debt, or basically implode the market.
Let's go to Kate Durian in London, Meese contributing editor and non-resident fellow of the Arab Gulf States Institute in Washington. Kate, good morning. The big decision this week that we have to see is OPEC Plus meeting on July 1st, which of course is probably the biggest factor determining the market direction now, managed supply. What is your thoughts for OPEC decision this week?
I think they're playing their cards pretty close to their chest because they don't really want the market to know what's going on. But from what I understand is there will be some pressure to put more oil on the market once the final leg of the cuts is tapered in July. They're still going to be withholding about 5.8 million barrels a day from the market. But it's also interesting that if there's going to be an increase, you've got to bear in mind that a lot of the OPEC members don't actually have the capacity to increase. I mean, there are three countries: it's Algeria, Angola, Nigeria, and of course Venezuela. Iran is off the market at the moment, but their production capacity is way below what it was in 2014, about 800,000 barrels a day. So basically, you've got Saudi Arabia, UAE, and Iraq, which are the three that can increase their production capacity. And then you have Russia, which I don't think wants to see prices at these levels or moving beyond 75, because that gives shale a chance to grow. And that's been something that they've been watching quite carefully. So I think they might increase production slightly in August, just as a signal to the market that they are being responsive, as Prince Abdulaziz of Saudi Arabia said, we will be responsive to the market. So I think, bearing in mind the fact that India is suffering from high oil prices, that they might just, make a signal. And they have been exporting more to India. I mean, India at one point wasn't importing so much from the OPEC states, but
Hey, do you have any sense about where they balance the desire to put more oil supply back versus the higher price? I mean, ultimately for countries like Kuwait and others, it costs a lot of money to also keep production locked in. And we are seeing, although not significant, incremental higher cost supply return, Canada tar sands, for example. So where do you think they weigh up that? I mean, $75 is way beyond anybody's dreams at the moment.
Well, I think the problem is that as you see oil prices going up, I mean, US shale could surprise to the upside. It's over 11 million barrels a day now. So that's, that's the highest it's been since last year on a weekly basis. And you've got more cash flow at the moment. So even though the companies will be exercising some kind of capital controls, but you have to return cash to shareholders. I think the fact that prices are as high as they are. You look at the rig count. Yes, there's all kinds of reports about fracking and water and seismic activity. But that's been the case for a long time, so it's not something new that's going to curb activity. I think it's labor, it's the movement of rigs, which has been an issue. But just getting workers back, moving them around from one place to another has been a problem since last year.
Let's bring in Walter Simpson, Managing Director, CCED in Oman, an oil operator there, independent oil operator. Walter, you sit at the end of the long chain of the OPEC supply cuts and now obviously the OPEC supply increases. Your thoughts on the way forward and the sort of bringing oil back to the market that has been left on the sidelines, and OPEC Plus has been a lot more conservative on that than many had expected. What's your outlook for their decision making in the second half of the year?
So, good morning, everybody. And Sean, look, caution has been their byword as they've gone through the process with the OPEC Plus controls. And it's been very successful. They have effectively, boosted the price back up and now have the ability to control that price by adding supply. So I think they'll continue with that caution. The conformance piece that Kate mentioned is important because now you're really down to the UAE and Saudi having that balance. And they've been very good at keeping the line for OPEC Plus and controlling production. And so I think they'll cautiously add more barrels. I think the price is probably a little bit on the high side for where they want it, but it's about there. And so I'm expecting a cautious increase. Now, what does cautious increase mean? Whether it's a few 100,000 barrels, 500,000 barrels, I sort of feel that's the right kind of number rather than 1 million barrels here and there. But I think it's a cautious increase that they're going to look to. And I think keeping the oil price at where it is probably a good plan for them. To be perfectly honest, I think It's high enough for them to feel the fiscal benefits, not high enough to really get shale opening the taps and getting after it. So we will see, but I feel that's the answer.
And Walter, in terms of the sort of sight, the line of sight, if you like, over what time horizon, in this last time the OPEC made a supply adjustment, I think it was the April meeting for May, June and July, they gave the markets a 3-month sign of direction. What do you think they should do on this occasion? Over what time horizon? As an operator, is it viable for you to operate month to month? Or I'm increasing next month, maybe I'm not. Or does it also help operators to have a kind of line of sight over 3 months?
Oh, look, the longer term stability is a real plus. You don't want to be going up and down on a monthly basis. So stability is important. Look, they have surprised us on a number of occasions, but why go away from a strategy that's been successful? The 3-month look ahead that they gave last time stabilized the pricing in the market and worked well for them. So why would you change from that when it's been successful? And I do feel they've got all the cards at the moment. Clearly demand is uncertain a little bit, but there's definitely good signs it's growing, and they control the excess supply. So why not stay with that?
Omar, we've looked in the past at sort of other factors that might add a sort of moderating influence on the market, the weak dollar being one of them, COVID and the second wave you've mentioned yourself in your previous comment. What's your thoughts on the other moderating factors like the weak dollar? Do you see that playing a role, or other issues that might emerge?
Look,
I was actually sending that to Omar, Walter, sorry.
Oh, good.
He's on mute. You're on mute, Omar. I don't know if you can get... Omar, can you hear me?
Yeah.
There you go.
Sorry about that.
I was just talking about the weak dollar and other moderating factors, yeah.
Yeah, so basically dollar actually found the low initially in January, 89 something on the dollar index. It's actually tried to break that low, got very close at like 89 and change, and then has actually moved up. So the dollar is actually going up as oil is going up. So the dollar has in fact strengthened markedly in the past 10 days, measured against other currencies, the dollar index. So no, I think basically, look, people were expecting shale to come back, still are. It's not coming back, it hasn't come back, and that's a positive for the market. People have been expecting Iran to come back because apparently the deal in Vienna was a done deal and it was only a matter of sitting down and talking and all the rest of it, and that's not happening. So that's another positive for the market. Demand was supposed to not come back. We're supposed to work from home forever, and nobody goes on holiday anymore. It's all going to change. Blah, blah, blah. Well, that hasn't happened, which is another positive for the market. People aren't investing. Companies aren't investing in the market. Why? Because the G7 says that by 2030 or whatever it is, we're going to phase out the use of oil. So not surprisingly. So is that positive? Yes. Again, positive for the market. And then people were expecting OPEC Plus not to be disciplined, but they are. Why is that? Because basically they have their necks on the line, right? If you tell somebody that we're going to, by 2030, you're going to be basically obsolete and, your economy is that's based on oil is going to be worthless. They have two options. One, maximize the price. Two, be nice to India. So I take the view that they're going to maximize the price. They won't be nice to India. And you add it all together, with the resurgence that we've seen in the global economy, with the amount of liquidity that's out there, the first phase, has to be a worry about inflation. And that is positive for commodities and positive for oil. So you add it all together, and I'm afraid people who've been, and again, the COVID stuff is equally, we've always been told that, demand's not going to be the same because COVID and worries about COVID. But demand's been doing nothing except increasing since, the first COVID variant. In fact, since April 2020, which is why prices are going up. So at some point, so basically they say bull markets start on pessimism and then kind of increase on skepticism, and then you've got basically optimism, and then you have euphoria. So in all that, I think we're just about starting the optimism phase. So I would
just starting.
Yeah, I would look considerably higher. I mean, it's going to be painful because people are still. I mean, this is one of the reasons why I love doing this show, because when all you guys are bullish, that's the time that I'll sell. As long as all you guys stay basically negative and bearish and worried, we hold for higher prices.
On that point, Kate, over many years, the OPEC policy has always been at least expressed to be considerate to the impact of higher prices on emerging markets like India that Omar referenced. Where do you think that fits into their consideration? And should it matter just from a purely demand point of view, I mean, regardless of sort of socioeconomic concerns, but purely from a demand outlook, does OPEC plus OPEC need to be concerned about the expressions of pain that, like India oil minister said over the last few days?
I think what they always argue that they don't control the price, right? They'll say that, well, it's market, it's markets that determine the price. We don't determine the price. We don't have a price target. But I think that it's difficult because of the uncertainty on demand. I mean, you don't know if there's going to be another lockdown in the winter, if the Delta variant and the new, and the subvariant are going to pick up, like in the UK. Cases are going up. You've got, sporting events have started. You've got, you walk around. Yesterday, I was in a shopping mall and it was packed. I mean, it was absolutely packed. Not everybody wearing masks, even though they're mandated, they're supposed to. And so I think there's that uncertainty. There's the Iran nuclear deal, which we're not, one day it's on, one day it's off. Are they going to agree to extending the monitoring deal with the IAEA? Is the United States going to go ahead with the negotiations?
I mean, you would think OPEC, in a way, are going into this meeting with supply concerns on the sidelines, at least, as shale not present for 21. Iran, whatever happens now, looks unlikely to be a factor for supply, additional supply in 21. So they're really facing with a kind of a demand outlook rather than the concerns of extra supply. Does that make it an easier decision?
I mean, even OPEC's own, forget about the IEA, because I don't think they're going to be looking at the IEA, considering it's...
I think they're not friends at the moment.
They're not friends at the moment. So even if you look at the OPEC numbers, they do expect a supply to outstrip, the demand to outstrip supply. Yeah. So, in the second half. And if you look at the demand outlook at the moment, it looks as if they will need to put some oil on the market. Now, they're not going to, I don't think they're going to put 1 million or 2 million. And I don't even think they're going to have a sort of 3-month out, because you can't, if you don't know how much if Iran is coming back, at what rate Iran is coming back, it may be 350,000 barrels a day, it may be 1.5 million. They have a lot of oil in storage. They've got, 65 plus million barrels in storage, some of it condensates. So I think you've got that. You've got the fact that...
Do you think the market conditions still deliver a reason for OPEC Plus to be so cautious? It strikes me that they can be a little bit bolder myself. Walter, you're, as we talked, at the sort of tail end of this as an operator, you're, I would dare say, having a good year, let's just put it that way, like most oil companies are, probably not expected to have these revenue levels. We'll probably see big profits across all the majors. My question to you is, how is that likely to impact their CapEx decisions, which of course famously last year were significantly cut, and we're seeing still this year, as we talked on shale, being held back? Where does oil operators go with this windfall of revenue and the outlook for increasing their own production capacity?
Well, I think you'll find there's two different halves to it. There's the the majors that have clearly cited they're going to move capital investment into the renewable space. And I would expect a chunk of the extra revenue from those players to go to that space. So I wouldn't expect it all to go to the oil and gas by any means. On the smaller players, and yeah, I think it will get invested in exploration and infrastructure in order to maybe not even increase, but maintain production. A year of non-investment hits your production profiles because you've got the decline to deal with. So if you're not investing for a year, it does make an impact. And I think that's where some of this money will go to. So
and would that be the same with the NOCs? Obviously, the big one in Oman is PDO, but across the region, you think they would be taking that windfall into further capacity increase?
Well, I think they will, because I think we're going to see a shift away from the majors and to these national oil companies driving oil production in the future, oil supply in the future. And so I think that's going to be key to them, is to make sure they keep that production levels up, because they will be the major supply. And that's, I think, going to be very important to them.
Let's go to the survey question this morning and get everybody's view on, as Omar says, the bearish sentiment of what might still be moderating. But I think ultimately the weak dollar is a bullish sign for oil markets, because in essence it is taking the pain away from the emerging markets. At least that's the thesis I'm putting forward this morning. Weak dollar will keep emerging markets quiet about the pain of higher oil price. Agree or disagree? I think we're there, even though India made some comments last week, they're being surprisingly quiet. Even at the low 60s, it seemed the emerging markets, and India in particular, the third biggest importer, was screaming, and now they're being relatively silent. Omar, it's Monday morning. Oil prices in Asia are opening essentially unchanged. They had a little bit of an up, and now they're sitting a little bit flat. Your thoughts or direction? Is there a momentum? I mean, all depends perhaps on OPEC, but the momentum towards $80 unstoppable now over the third quarter?
You always have to, in my opinion, you always have to trade basically trends as opposed to noise, right? So noise is what you hear every day about, these stories, this guy said this and this variant did that, and, all this kind of stuff. The trend has been one way in oil since we set that low, one way. Back in February on this show, I said that oil prices, WTI, would get to $80, right? And that's because you're looking at the trend, not because you're using some kind of magic. You're looking at the trend. The trend is up. Why is the trend up? Because basically, if you take something like demand, you completely eviscerate it, you destroy it, and it's at zero. It can only go one way, which is higher. If you basically have a cartel that can manage for the first time in a long time oil prices, because its big competitor shale has been shot through the brain, you're only going to get one thing, which is basically curtailing of supply. So if you have curtailing of supply, and if you have demand which is at zero and can only go one way, it tells you that the trend is higher, and the trend will continue to be higher. You're going to see, and you are seeing, major dislocations between price and supply. These dislocations will work through the system eventually, but until you see that, prices will go higher. Investment, if you look, basically you've got this whole green thing. So big oil is not going to invest. Big oil is going to divest from carbon-based fuels, or at least oil, maybe not LNG and gas. Oil companies, sovereign oil companies, I'm not so sure that basically the big idea is to basically put more money to increase in production when the world is telling you, when the G7 are telling you that we're not going to basically use oil, or we're going to decrease, emissions and all this kind of stuff. I really don't see it. So I think basically what we're going to see is, less, which we've seen for the last, 5, 6, 7, 8 years, less and less investment. A more, a greater demand, and until you get some kind of realization that this green energy, be it wind or solar or whatever, is not in any shape, way, or form going to meet the energy demands that we have, and we have to think about, another way to get there. But if this is the idea, I think oil prices long term are headed higher. In the short term, I think we get to 80. Once we get to 80 and we have this, everybody's become bullish and we get this kind of euphoria, then it might be time for it to see like a large pullback. But I think trend-wise, if you look between now and 2-3 years forwards, higher.
Well, what about this week, Kate Durian? Is there any other thing to be watching other than the OPEC meeting? There is a sense, will the summer be stolen in Europe? Will people be going on holidays, or will the Delta variant spoil the party? And indeed, does it matter? The oil markets seem unperturbed by such things these days.
I don't think it really matters that much. I think, there is, people are using cars more than they're using planes, apparently, putting cars on ferries and going across to Europe. But the problem is that the rules keep changing now. We might open up here in July, but there are tensions within Europe as to who's opening up, what countries are being removed from the red list and the green list, and how, it just seems to be so complicated. I think you saw an initial rush when they opened up, but I don't think we're going to be traveling in the same way. So I think the main thing to watch out is, Iran. You've got a new president who has been elected, hasn't really taken office yet. So whether they rush to secure a deal before then, it's looking quite iffy. You've got to look at Libya. They've just had a meeting in Berlin about the future of Libya. Production is up, but whether this peace that has prevailed for a few months is going to hold is another issue. So I think there's a lot of uncertainty, and prices could go up. It all depends on what OPEC does, but I think you're going to start to see a bit of fatigue, and you're going to start to see, countries like Russia saying, we can't allow prices to go much higher because shale is going to come back. I mean, some people are bullish, some people it may surprise to the upside, it may not, but at the moment it looks as if oil sands is coming back, then you have the higher priced oil, returning to the market. So I think they have to look at and weigh all of these, but I think they will increase slightly from August.
Well, let's get the survey result and give Walter the last word this morning. How can we 52 and 52? See, we're in the bullish world of 104%. We've had to increase percentage points just to cater for all of this stuff. That's funny. Well, even the computer says no. Walter, the outlook that you would have for this week vis-a-vis obviously the OPEC decision, but I also would welcome your closing comments on some of the supply chain challenges that we're seeing in many sectors, shortage of talent to meet the new demand requirements. I'm wondering, given the continuation of COVID, while it's not significant enough to seem to impact the direction of oil price, it does have its impact on talent and movement of people, getting people in the right places and so forth. I'm wondering, how is that impacting oil operators?
Whoa, that's a big question. I'll try and give you a short answer.
Yeah.
So look, clearly, from the OPEC.
It's not. Maybe would it be a short one, or it is maybe.
Well, no, it is, and I think it will continue. And I think actually COVID's focused a number of states, particularly in the Gulf, around where those skills are coming from and what skills they need to have in the population themselves. And I think part of the conformance that OPEC brought with the curtailment of production and the fiscal discipline that's required on the back of the economic penalties that the low oil price brought has got countries thinking about, how do I make sure my population is employed, I have the right skills, and I can drive my economy. And I think that's changing and accelerating as a result of COVID. And I think that means that we're being hit by getting skills in from overseas is not as easy as it has been. And that's because countries are looking at how they can build the skills themselves and get that development for their own people in order to be able to fill the gaps and drive their economies themselves. I think that's perfectly fair. The question is how smooth that transition is. And it's going to be lumpy, I think, to begin with, but I think it will improve with time.
Well, it certainly seems to be becoming a big factor, and for all the reasons we talked about earlier, in the sense that the future incremental supply increase will be coming from the Gulf and other national oil companies rather than from the majors. And so pretty critical that that talent base is present. Well, we'll leave it there with Brent crude trading not really changed this morning, in this Monday morning in Asia, but the outlook trend is positive. The big question is, what will OPEC do? Maybe the markets are frozen in the headlights of an OPEC decision, but it seems to me if they only do a 500,000 number, markets are hitting 80, maybe even this week. But we'll see. If they do a 3-month outlook, I think we kind of moderate where we are. But a 1 month at 500, I think it could be very bullish. Kate, thank you so much for joining us from London. Omar from Dubai, Walter from Muscat. Great to have your thoughts this Monday morning. And for everybody else, have a great week. We'll catch up with you each morning, same time. Take care. Thank you.
Thanks, Sean.